Good morning and welcome to Maryland Today. My name is Jeff St. Pierre, and it's a pleasure to welcome Nina Heck back into the studio, this time to talk about the misconceptions that surround student loans. Nina is the Advocacy Director and Assistant to the President of Guidewell Financial Solutions. Nina, great to see you.
Thanks for having me, Jeff.
Well, today we're going to talk a little bit about some student loan myths. Many students who entered college this year are also student loan borrowers. Research shows their ability to manage loan debt will depend on how informed they are on their loans. But separating fact from fiction isn't always easy here, so that's why I've got you in here, Nina. Before we start, why do you think so many misconceptions surround student loans?
Well, Jeff, like many loan products, student loans are very complicated, or can be very complicated. They come in a lot of different forms. There's public versus private, unsubsidized versus subsidized. There's different repayment terms and different options, and people become very overwhelmed. When you think about the information needed to gather just for FAFSA and then trying to determine the loan product, this can all be such an overwhelming process that by the time that they get to that point, they tend to listen to people rather than to really do their homework and figure out what they're signing. You also have to consider how much the government has its share of changes. Recently they talked about the ITT technical schools closing, so you have to really stay on top of a lot of these things just to know where it's going.
I don't ever want to think about FAFSA again, just for the record. I've been there. I'm done with that. I don't need to bring that up anymore. But to help fix this situation, we're going to debunk some of these myths here. So we're going to take a look at quite a few of them. Here's one that we often buy into, though. You don't need to worry about your student loans until you graduate. Nina, is this statement true or false?
It's false.
Okay.
I mean, the more you know, the better you are. I often direct students to many of the high schools that they're attending have excellent seminars. They bring in servicers that talk about student loans. So this information is available to not only the student, but their parents. And all this information prior to the process is great. A recent Sallie Mae study found that students who took the time to research and plan before borrowing owe 1/3 less when they leave school than those who don't. And part of this is because they took the time to look into scholarships and grants. There's also work programs that are available to them. And another thing that I always have pushed is, look at your local community colleges. Maybe you can get your general studies there and incur less expense as opposed to going off to a 4-year private school.
So say you've done all that and you still need some college financing. Why is it important to examine your options before you apply for that student loan?
You really want to, take the time to do your math before you set out with this financing. We see this often in counseling, where, and actually I saw it with my own daughters. They may have needed an $8,000 loan to complete out their application, but they were offered $10,000. I've even counseled students where they were offered $15,000 and they took it and used it for spending their spending expenses while they were on campus. So this is all real money that has to be paid back.
Yeah.
So you really want to make sure that you understand what you're borrowing, borrow only what's needed. And the rule of thumb is, for every $10,000 you borrow, the payment back is $100 a month, but that takes a long time.
Oh, yes, it absolutely does. Having been there myself, I understand that. Here's another myth I want to take a look at. The interest on your student loans won't start until you graduate. I already see you shaking your head here, Nina. Why is this statement not true?
So it's really a very common misconception. Partly because we have federal student loans that are subsidized, which means they were based on financial need, and they do not accrue interest from the time you take them out. As opposed to that, there's unsubsidized loans that will accrue interest from the time that you take them out. And I saw this again through my own experience with my daughters. You had statements that come in that ask for interest payments through the course of them being in school. If you pay that, then, of course, the loan you have is what you're going to repay. Otherwise, you're going to be surprised when you get to the end and find out that you owe much more than what you thought you did, especially if they started in the first year. So at minimum, borrowers really need to read the fine print of their loan agreements so that they don't have these nasty surprises at the end.
Definitely good advice there. How about this one? Very important one, too. If you're having trouble repaying what you owe here, true or false, Nina, student servicers won't help if you encounter repayment problems.
So this isn't true, Jeff. Most of the time, I always suggest that people need to reach out to their servicers, let them know what's going on, whether it's joblessness, underemployment. There are so many programs available to them that can help with this. It's wise to contact the servicer immediately, let them know what your situation is. We at Guidewell also can help them with this problem. We pride ourselves in having a holistic approach in that we're going to help them set up a budget, brainstorm ways to generate extra income, and really evaluate their loan alternatives to to open that up to them.
I can speak from personal experience, having gone through some financial troubles a few years ago. It's always important to look into possible deferment options or forbearance options. Usually loans have those built in some way where you can say, I need a couple months and then come back into it. And it doesn't penalize you at all as long as you give them the heads up instead of just not paying them.
That's absolutely correct, Jeff. There's also graduated payments that's based on what your income is at that time. So if it's low now and it picks up later, that can be a great help as well.
Always important to ask the lenders on these situations because they will have that information. Okay, another student loan myth here that pertains to repayment. True or false, it always pays to refinance your loan.
So refinancing may seem like an attractive option to financial struggling borrowers who hope to lower their payments, but sometimes that strategy doesn't work. Refinancing with a third party could allow the person to lose the benefits that's on their federal loans, such as loan forgiveness, deferment, income-based repayment.
Yeah.
In loan forgiveness, I'm speaking of like the public service loan forgiveness or cancellation.
Does this same rule hold true when it comes to loan consolidation?
Loan consolidation, on the other hand, is allowing that person to put everything together to have one single payment each month. Generally, as a rule, you'll end up with a smaller payment, but understand that this is also extending out the length of term that you're going to repay. And quite honestly, Jeff, I look at some of these credit reports and they're at 30 and 40-year repayment terms.
Yeah. Oh, they definitely grow, as I can speak from personal experience. Earlier, you did mention the Public Service Loan Forgiveness Program, or PSLF, because I won't be able to say that over and over again. I understand misconceptions also surround this program, but before we discuss them, let's talk a little bit about what PSLF is and how it works.
So the Public Service Loan Forgiveness Program allows you to forgive the remaining balance for certain borrowers on their federal loans. It doesn't apply to all federal loans. Primarily, we're looking at direct loans, and the forgiveness is only granted after they've met the 120 qualifying monthly payments.
Okay.
Actually, in 2017 will be the first of this program being implemented, so we're all very eager to see how this goes down.
Yeah.
More importantly, though, with public service loan forgiveness is you have to be working with a employer that meets the criteria for that loan forgiveness program.
So what types of employment qualify under the PSLF?
So there's different ones. The government organizations at any level, whether it's federal, state, local, or tribal, not-for-profit organizations that are tax exempt under the 501c3 of the IRS code, and then, of course, just nonprofit organizations such as military services, emergency services, public safety, law enforcement, public education, library services. There's quite a few, and you can Google that on the U.S. Department of Ed, and they list just about everything that qualifies.
Okay, so say I've been working as a teacher for 10 years. First of all, I deserve a medal for making it 10 years. And I've made regular payments on my federal direct loan during that time. Would I automatically qualify for forgiveness under the Public Service Loan Forgiveness Program?
So again, Jeff, a lot of this is wrapped around where you're employed.
Okay.
One of the things I'd like to say as far as the teacher program, though, there is a teacher loan forgiveness program. And again, the criteria is based upon where they're teaching. There's different schools that qualify.
Sure.
They also have to have this certificate of employment verification. And this information is on the U.S. Department of Education. Once you Google just the teacher loan forgiveness, it'll tell you what schools that do apply, and it'll give that form that's available for them. So keep in mind, with the public service loan forgiveness and the teacher loan forgiveness programs, there's a criteria for meeting full-time employment.
So how does the Public Service Loan Forgiveness Program and the Teacher Loan Forgiveness Program define full-time employment?
So the definition is usually set by the employer, what they consider to be full-time employment, but you're looking at 30 hours per week.
Okay.
Oftentimes you may have someone who's working 2 part-time jobs, but would be the equivalent of a full-time position. One of the things I still want to stress is to make sure that you have that employment certification form completed by these employers, especially today. You could have a public service loan forgiveness program that government funding runs out, so you want to make sure that you get credit for that particular program and the work and time that you put into it.
Well, while we're talking about PSLF, here's another question for you. True or false? I don't have to worry about taxes on any loan balance that's forgiven.
So the truth is it depends. If it's public service loan forgiveness, then you're correct. But there's also forgiveness that comes from total and permanent disability that may not be the option. And you have to keep in mind there are different programs for income-driven repayment that absolutely are not tax exempt. So when you apply for forgiveness, you want to really check out where you stand And also, you don't want to be surprised by these unexpected tax bills. Know what you're getting into.
So it's clear that it pays to become familiar with your loan agreement and terms. That being said, many borrowers don't. And when repayment problems arise, they may ignore the situation thinking that it's just going to go away. Does this strategy make sense?
No.
I had a feeling you were going to say that.
Not from a financial perspective. Ignoring your problem, it's not going to make it go away. And the worst case scenario is if they go into default, you might be in a state where you're subject to a wage garnishment. They can also seize your federal tax refund. So this is definitely not the time you want to bury your head. In addition to that, it can ruin your credit because it's showing up on your credit report as late and defaulted payments. Many people think bankruptcy is the option, but you really need to think again because oftentimes that's not an option when it comes to student loan.
Yeah, student loans, it's very, very, very difficult to get out of them. Once you're in, you are basically in. And also keep in mind, if you co-sign with, say, a parent, if something happens to you, if you're not paying, they're going after that parent or whoever that co-signer may be. I know I've had a few instances where I've missed a payment by a day or two and they call my dad and they're already asking
they
him,
do.
Where
They're very
is the
aggressive.
money? Yes. So keep in mind that these loans are not going anywhere until you pay them off, essentially.
You're
so
right.
let's get back into this. You can understand how hopeless borrowers may feel when they aren't able to keep up with their loan payments here. So what advice do you have for anybody listening right now who might be worried that it may be impossible to repay what they owe?
So you need to realize that there are repayment options out there and you're not alone. We've counseled so many people that are in this position. I would urge you to do something proactively rather than wait for them to call you.
Mm-hmm.
So there's a lot of research online that gives you options that are available. The U.S. Department of Ed has extensive information about all the different programs. Your college that you graduated from, you usually have some good people that you can tap into there that can also help. And again, an organization such as ours can be really beneficial, when you're in this position. Some of the servicers also offer a chat option. And so for the borrowers that are afraid to contact the servicer, I found that many have utilized their chat option and were able to find out what they could do. So keep that in mind. There are options out there. Take advantage of, again, calling GuideWell. We do have different fee structures for the student loan counseling, but in the long run, if you're not able to pay those and you're not doing something, it pays to get the information you need to get back on track.
It's also important to note the lenders are not evil. They want to get their money from you, so they're willing to work with you. They have the information if you have questions. It's another myth that we were talking about, that the lenders are evil people, and they're not. If you have a question, feel free to contact them and ask them.
Absolutely, Jeff, because there are so many programs, even private loans, as much as people hate to discuss those. Many of the private lenders have payment options as low as 2% interest on them. They extend these payments out. I've seen them where the payment's like 1% of the balance. So there are options available. It's just a matter of seeking that help and finding out what's out there.
Well, I think we've gotten a lot of great advice here today. We've debunked quite a few myths. So why don't we wrap things up here, Nina? Before we go, do you have any parting advice for us?
As always, Jeff, if your listeners are in the process of student loan or already have their student loans, it pays to be informed. If you're having repayment issues, reach out. There's help out there for them. If you need help determining where you stand financially, you can certainly have your loans reviewed or your options reviewed through an organization such as ours. You can visit our website at guidewellfs.org, or you can call us for an appointment at 1-800-642-2227. We are committed to helping you become financially secure.
Let's get that contact info one more time.
Sure. Our website is guidewellfs.org, and our phone number is 1-800-642-2227.
Well, Nina Heck, Advocacy Director and Assistant to the President at GuideWell Financial Solutions, thank you so much for coming by and chatting with us more about this.
Thank you, Jeff.